Morrisons has continued the recent run of bad news from the major supermarket chains by reporting another fall in sales. Like-for-like sales excluding fuel fell 2.9% in the 3 months to May 3, a worse performance than the previous quarter when sales dropped 2.6%. The news sent shares in Morrisons down 6% in early trading. Morrisons is the UK's fourth largest supermarket chain, trailing Tesco, Asda, and Sainsbury's in annual sales. Its struggles reflect wider problems in the sector, which has seen fierce price competition following the growth of discount chains such as Aldi and Lidl. Recent results from both Tesco and Sainsbury's were depressed by a downward revaluation of how much their properties were worth. On Wednesday, Sainsbury's reported its first full-year loss for 10 years, while Tesco announced a record annual loss last month. Eager. This is the first interim management statement since David Potts took over as Chief Executive Officer on March 16. Mr. Potts was picked to replace Dalton Phillips, who announced his departure in January after 5 years at the helm of the Bradford-based firm. My initial impressions from my first 7 weeks are of a business eager to listen to customers and improve, Mr. Potts said. The company said it closed more stores than it opened during the quarter, and it has also announced plans to cut 720 jobs at its head office in Bradford. It said that simplifying the head office would cost it £30 to £40 million this year. Morrisons said a full assessment of the business was underway, and it would give more details when it releases its half-year results in September. It added that it anticipated underlying pre-tax profits would be higher in the second half of its financial year than the first. In March, Morrisons said underlying full-year profits had more than halved to £345 million, its worst results in 8 years. After taking account of a £1.3 billion write-down in the value of its supermarkets, it reported a statutory loss of £792 million.